Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about NEUROCRINE Biosciences INC quarterly report. NEUROCRINE Biosciences Inc. offers a diverse range of pharmaceutical products and services for various neurological, neuroendocrine, and neuropsychiatric disorders. Their product portfolio includes INGRZZA, treating tardive dyskinesia and chorea associated with Huntington's disease, ALKINDI, treating adrenal insufficiency, Efmedy capsules, treating classic congenital adrenal hyperplasia, Orilissa tablets, treating endometriosis, Orion capsules, treating uterine fibroids, CRNESSITY, treating congenital adrenal hyperplasia. Additionally, the company has several product candidates in clinical development for conditions such as dyskinetic cerebral palsy and schizophrenia, valbenazine, movement disorders, NB-1,076,986, major depressive disorder, osavampator, and NB-1,070,770. NEUROCRINE Biosciences also engages in collaborations with various companies, including Enzira Pharma UK Limited, Takeda Pharmaceutical Company Limited, Xenon Pharmaceuticals Inc., Voyager Therapeutics Inc., Mitsubishi Tanabe Pharma Corporation, and AbbVie Inc. The stock price of NEUROCRINE Biosciences Inc. has increased by 27.26% in the past year due to several key developments. Positive study data from the Phase 3 KINECT4 study for INGRZZA, a treatment for tardive dyskinesia, showed meaningful improvements for patients over 48 weeks. This led to a 7.7% climb in share price. The company's strong earnings performance also contributed to its positive stock price. In Q3, NEUROCRINE Biosciences delivered an adjusted EPS of $2.17 and revenue of $794.9 million, beating expectations. INGRZZA sales grew by 12% year-over-year to $687 million, while total net product sales increased by 28%. Analyst upgrades and positive outlooks have also boosted the company's stock price. Citigroup initiated coverage with a buy rating, and Morgan Stanley and RBC maintained or raised their price targets with buy or overweight ratings. The consensus rating for NEUROCRINE Biosciences is a moderate buy. The primary drivers of revenue growth for a company are multifaceted. Key contributors include increased sales of existing products, such as INGRZZA, which saw a significant increase from $612.9 million in 2024 to $686.6 million in 2025. The launch of new products like CRNESSITY, a first-in-class treatment for CAH, also played a crucial role. Additionally, royalties earned on sales of other companies' products and the commercial success of INGRZZA and CRNESSITY contributed to revenue growth. On the other hand, several factors can lead to revenue decline. These include losing significant customers due to bankruptcy or inability to pay, failure to comply with license obligations, termination of collaboration agreements, loss of patent protection by licensors, and an inability to raise additional capital. Net income and profit margins. A shift in performance. The financial performance of a company has undergone significant changes between Q3 2024 and Q3 2025. Net income has increased by $79.7 million, 61%, for the 3 months ended September 30, 2025, compared to the same period in 2024. This growth is also reflected in the year-to-date figures, with a net income increase of $86.7 million, 36%, for 9 months ended September 30, 2025. However, profit margins have shown mixed results. The operating income margin has improved from 29.6% to 30.1% in Q3 2025, while the net income margin has increased from 21% to 26.4%. Conversely, the year-to-date operating and net income margins have declined from 24.8% and 13.8%, respectively, to 19.9% and 15.8%. The reasons behind these changes are not explicitly stated in the provided summaries, leaving room for further analysis and investigation into the underlying factors driving this shift in performance. The company's financial performance indicates a consistent trend of generating positive operating cash flow, with an increase from $352.9 million in 2024 to $394.3 million in 2025. This growth demonstrates the company's ability to manage its operations efficiently and generate sufficient cash to support its business activities. The company's debt level has seen a notable increase over the past period. The available-for-sale debt securities rose by $259 million, total liabilities increased by $133 million, and overall debt level surged by $190 million. This significant rise in debt levels is a key financial development. On the other hand, interest expenses have decreased substantially. Notably, cash paid for interest dropped from $1.6 million to zero, indicating a substantial reduction in interest payments. Management is optimistic about the company's outlook, citing sufficient capital resources and anticipated revenues to meet funding requirements for at least the next 12 months. However, they also acknowledge key challenges such as managing growth effectively, developing a marketing and sales organization, and maintaining administrative systems. The company plans to invest in its commercial organization, including expanding its psychiatry and long-term care sales team. Management is transforming research and development strategies to focus on biologics, which requires significant investment. They expect to increase expenses for the foreseeable future and may not sustain growth and profitability if they fail to manage these challenges. Management also highlights potential risks to the company's operations and profitability due to non-compliance with healthcare laws, including significant penalties and reputational harm. The company's future performance will depend on managing growth effectively and overcoming these key challenges. Concerns about inventory buildup and supply chain disruption are evident in the financial summary. Inventory levels increased by $11.9 million from 2024 to 2025, indicating potential issues with managing stock levels. Furthermore, the company's reliance on a limited number of third-party suppliers makes it vulnerable to disruptions caused by loss or delays. Supply chain risks are exacerbated by geopolitical and macroeconomic developments, natural disasters, public health crises, and trade restrictions. The threat of targeted tariffs or trade measures could disrupt supply chains and increase costs. Additionally, the increasing frequency and severity of supply chain attacks pose a significant risk to the company's operations. These concerns highlight the need for proactive measures to mitigate potential disruptions and ensure business continuity. That concludes the financial summary for NEUROCRINE Biosciences Inc. Feel free to comment below, and I will be happy to answer them when possible.